Welcome back, everyone, to the Traders with Edge podcast. Today, we're diving deep into the world of instant funding prop firms. It's a landscape full of opportunity, but also potential pitfalls. And you might be thinking, isn't getting funded the goal? And yes, it is. It's a huge step. But did you know that a shocking 82 traders actually choose the wrong firm? We're going to unpack what you need to know to navigate this space successfully and land in that successful 18%, whether you're a seasoned trader or just starting out. And by the way, if you're an up-and-coming trader looking for funding, you should definitely check out what we offer here at Traders with Edge. We have a challenge for traders, and if you pass, we'll fund you with up to $500,000. More on that later. Let's break down why getting into the right prop firm is so crucial.
Yeah, it's easy to get swept up in the excitement, quick access to capital, and those eye-catching funded account numbers. But before you jump in, remember choosing the wrong firm can be a costly mistake, both financially and in terms of wasted time and effort.
Okay, so let's unpack this. What are some things traders should be looking at beyond those flashy headlines?
The real game changer lies in understanding the often overlooked trading conditions. These are the nitty-gritty details that can make or break your trading success. For example, let's talk about daily drawdown limits. A firm might advertise a generous total drawdown limit, say 8%, but hidden in the fine print could be a daily drawdown restriction of just 4%. That means even if your overall trading strategy is sound, one bad day could wipe out your account.
Ouch. That'd be painful. So what's a good rule of thumb for drawdown limits?
Look for firms with at least a 5 daily drawdown limit. This gives you more breathing room to accommodate the natural volatility of the market, especially if your strategy involves higher risk trades.
That makes sense. So it's not just about the overall limit, but also about how that limit is applied on a daily basis.
Exactly. And here's another critical condition to watch out for: news trading restrictions. Imagine you've spent months perfecting a news trading strategy, only to discover your chosen firm forbids trading during specific windows around major news releases.
Oh, that would be incredibly frustrating. It's like training for a marathon only to find out the race has been canceled on the day of the event.
It's crucial to make sure the firm's trading conditions align with your preferred trading style. Some firms might have restrictions on specific instruments, trading sessions, or even the maximum correlation allowed between your trades.
So before you even think about applying to a prop firm, you need to create a checklist of non-negotiable trading conditions.
Absolutely. Consider it your trading constitution. This checklist should include everything from drawdown limits and news trading rules to maximum position sizes and allowed instruments. And if you're into algo trading, confirm the firm's stance on that as well. These details might seem like technicalities, but they can have a massive impact on your trading style and overall profitability.
It's all about finding a firm that fits your trading personality, not trying to squeeze yourself into a mold that doesn't suit you. Now, another area where I see traders get tripped up is profit splits and payouts. That 90% profit split might sound amazing at first glance, but it's important to understand the nuances. What are some of the hidden traps traders should watch out for?
Those big profit split numbers can be very enticing, but the devil is often in the details. One common trap is the minimum profit threshold. Some firms require you to reach a certain profit level before they'll even process a payout. You could have a winning month, but if you don't hit that magic number, you won't see a dime. Imagine having to make $5,000 in profit before you see any of it. If your strategy typically generates $1,000 a month, that's 5 months of work before a payout.
5 months. That would be a long way. It's like working for free until you hit a certain quota. What else should traders be aware of?
Hidden fees are another sneaky profit eater. Pay attention to processing fees, withdrawal fees, and any administrative fees that might be buried in the terms and conditions. These seemingly small fees can add up over time and significantly erode your earnings. It's essential to calculate the net profit split after factoring in these fees to get a true picture of your potential earnings.
It's all about transparency. You want a firm that's upfront about its fee structure and doesn't hit you with any surprises down the road.
Absolutely. And then there are the scaling plans, which can be both alluring and tricky. Many firms offer scaling plans to entice traders with the promise of increased capital as they become more profitable. But these plans often come with their own set of rules and restrictions that can significantly impact your profit split and payout structure.
So what are some questions traders should ask about scaling plans?
The great question to start with is, what defines a profitable month for scaling purposes? This is where things can get really murky. Some firms might require a minimum percentage gain, while others might have more complex metrics based on consistency or risk-adjusted returns. And some firms even reset your scaling progress if you have a single losing month. Imagine working your way up to a higher account level and then getting knocked back down to square one because of a single red month. It can be pretty disheartening.
Wow, that is brutal. While I can see how that would encourage consistent performance, it definitely seems like something traders should consider carefully.
Yeah, it can be a real setback.
Yeah.
And on that note of things that can impact your profits, let's talk about payout schedules. Some firms offer weekly payouts, which can be great for cash flow, while others operate on monthly or even quarterly cycles. And some even have maximum withdrawal limits, which can be frustrating if you're trying to access a significant portion of your earnings. It's essential to understand the payout structure and make sure it aligns with your financial needs and goals.
Yeah, it's like choosing between getting paid hourly or getting a big bonus at the end of the year. Both have their pros and cons, and it really depends on your individual circumstances. Okay, so we've covered trading conditions, profit splits, and payout structures, all super important factors. But what about the trading environment itself?
Oh, this is another area that often gets overlooked, but it
Right.
can significantly impact your trading performance and overall experience. Think of your trading environment as your digital office, the space where you spend countless hours analyzing charts, executing trades, and managing your risk. You wouldn't want to work in a physical office that's constantly crashing or lagging, right?
Definitely not. I need my coffee machine and high-speed internet to function properly.
Exactly. And the same goes for your trading platform. A subpar trading environment can be a major source of frustration and can even sabotage your profitability.
So what are some of the key elements of a good trading environment?
First and foremost is platform stability. You need a platform that's reliable, responsive, and doesn't freeze up on you during crucial trading moments. Imagine missing a perfect entry because your platform lagged. Or even worse, getting stuck in a losing trade because you couldn't close your position due to technical glitches.
That would be a nightmare. It's like being in a race car with a faulty engine. You might have the skills to win, but the equipment is holding you back.
Precisely. Then there's the quality of the data feed. You need accurate and timely market data to make informed trading decisions. A faulty or delayed data feed can lead to bad entries, missed exits, and all sorts of headaches.
It's like trying to navigate with a broken compass. You might think you're heading in the right direction, but you're actually way off course.
Exactly. And speaking of speed, execution speed is also paramount. In today's fast-moving markets, milliseconds can make a difference. Slow execution speed can mean the difference between getting filled at your desired price and missing out on a profitable trade, or getting stuck with a losing one.
It's like playing a video game with lag. Your actions are delayed, and you can't react to the game in real time. That split-second delay can cost you the game. What about customer support? Is that important too?
Absolutely, when things go wrong, which they inevitably will at some point. You need a responsive and knowledgeable support team to help you get back on track quickly. The last thing you want is to be stuck with a technical issue or have an urgent question about your account and be left hanging by the support team.
It's like calling 911 and getting put on hold. Not a good situation when every second counts.
Exactly. So before committing to a prop firm, don't just take their word for it. Actually test drive their trading environment, place some trades, test their execution speeds, and see how their platform handles different market conditions. Don't be afraid to contact their support team and ask detailed questions. You want to make sure they're responsive, knowledgeable, and capable of resolving issues quickly and efficiently. Remember, your trading environment is your digital office, and a well-equipped and supportive environment can make all the difference in your trading success.
That makes total sense. You wouldn't sign a lease on an office without checking out the space first. Now let's switch gears and talk about something that might not be as flashy as profit splits or fancy platforms, but it's absolutely crucial: regulatory compliance.
You're right. This isn't the sexiest topic, but it's incredibly important for protecting your trading career and ensuring you're partnering with a legitimate and trustworthy firm. In the world of prop firms, regulatory compliance acts as a safety net, ensuring your funds are protected and your rights are upheld. It's all about minimizing risk and creating a transparent and trustworthy trading environment.
So what are some red flags that should make traders think twice about a prop firm's legitimacy?
First and foremost, check the firm's structure and registration. Are they clearly registered as a legitimate business entity with relevant financial authorities? Do they have a transparent ownership structure, a physical business address, and a verifiable track record? These are basic indicators of legitimacy that you should never overlook.
It's like checking if a contractor is licensed and insured before you hire them to do work on your house. You want to make sure they're operating within the law and that you're protected if something goes wrong.
You should also be wary of firms that are overly secretive about their operations or make exaggerated claims about their profitability. If something sounds too good to be true, it probably is. And speaking of red flags, be extra cautious of firms that try to disguise themselves as educational providers to sidestep regulatory requirements. While this isn't always a sign of malicious intent, it warrants extra scrutiny.
Why would a legitimate trading firm need to hide its true nature?
That's a great question. A legitimate prop firm should be proud of its status and transparent about its operations. And let me share a cautionary tale. There have been cases where prop firms have disappeared overnight, taking traders' funds with them. These scams highlight the importance of due diligence. And choosing a firm with a solid regulatory track record and a transparent business model.
Oh, that's a scary thought. It's like investing in a ghost town. You think you're getting a great deal, but it turns out to be a complete illusion. Speaking of making smart choices, let's take a quick break to remind our listeners that Traders with Edge offers a fantastic opportunity for those looking to get funded with up to $500,000.
That's right. We've created a challenge designed to help talented traders like you get the funding they need to take their trading to the next level.
We believe in transparency, fair trading conditions, and a supportive trading environment. So if you're ready to join a prop firm that has your back, head over to our website and check out our challenge. Now back to our deep dive. Let's shift gears and talk about how traders can adapt their strategies for prop firm success. It seems like trading with someone else's money would come with a different set of rules and considerations than trading your own personal account.
You're absolutely right. Trading for a prop firm requires a shift in mindset and often requires significant adjustments to your trading strategy. It's not just about making profitable trades. It's about doing so within the framework of the firm's rules and risk parameters. Think of it like this. You're playing a game with a different set of rules. You can't just use the same strategies you used in your personal account. You need to adapt to the new playing field. It's a great analogy. So adapting your strategy for prop firm success is all about finding that sweet spot between profitability and compliance. It's about understanding the firm's rules and using them to your advantage, not viewing them as limitations.
That's a great way to frame it. It's about playing the game strategically and working within the parameters to achieve your goals. It's like playing chess. You need to understand the rules and develop a strategy that takes those rules into account. Now let's shift gears and talk about the long game. Building a sustainable trading career. It's not just about getting funded. It's about thriving in the prop firm environment and achieving consistent profitability over the long haul.
Getting funded is just the first step. The real challenge is developing the skills and mindset to consistently generate profits over the long term. It's like getting accepted into a prestigious university. It's a great accomplishment. But the real work begins once you're enrolled.
So what does that journey look like? How do you go from being a funded trader to a consistently profitable one?
It's a process. And like any successful journey, it involves a series of phases. The first phase is all about building a solid foundation. This means mastering the firm's trading platform, understanding all the trading rules and restrictions, and developing strategies that align with the firm's risk parameters.
So it's like learning the ropes of a new job. You need to get familiar with the tools, the processes, and the company culture.
Exactly, once you have a solid foundation. The next phase is about developing consistency. This means shifting your focus from chasing big wins to generating steady, sustainable returns. It's about refining your position management skills, diversifying your trading approaches, and developing a disciplined trading routine. This phase requires patience, perseverance, and a willingness to learn from your mistakes. It's also crucial to develop a detailed trading journal to track your progress. Identify areas for improvement and hold yourself accountable.
Some might argue that this focus on consistency can feel a bit like a grind. What are your thoughts on that?
It's true that focusing on consistency can feel less exciting than chasing those big wins, but it's the key to long-term success in the prop firm environment. Think of it like an athlete training for a marathon. They don't just sprint all the time. They focus on building endurance, developing a consistent training regimen, and gradually increasing their mileage. And once you've established a pattern of consistency in your trading, you can move into the third phase, scaling and growth.
Now things are getting exciting.
This is where you start to reap the rewards of your hard work and dedication. This phase involves maximizing scaling opportunities, expanding to multiple accounts, and potentially even building a team of traders. It's like growing a business. You start small, build a solid foundation, and then gradually expand your operations as you become more profitable and confident.
So the key takeaway here is that building a sustainable trading career is not just about trading skills. It's about developing a business mindset and treating your trading like a professional endeavor.
Absolutely. The most successful prop firm traders don't just focus on the technical aspects of trading. They develop a business plan for their trading, complete with income goals, risk management strategies, and scaling plans. They also understand the importance of networking, building relationships within the prop firm community, and continuously learning and adapting to the ever-changing market landscape.
So it's not just about being a good trader, it's about being a savvy business person as well. Now let's bring all this together and talk about what it really takes to choose the right prop firm and set yourself up for success in this exciting but demanding world. We've covered a lot of ground today. Trading conditions, profit splits, trading environments, regulatory compliance, strategy adaptation, and building a long-term career. It's a lot to digest.
It is. But remember, the key is to approach this decision strategically, not emotionally. It's easy to get caught up in the hype and make impulsive choices, especially when you see those big funding numbers and profit splits. It's like going to a casino and betting all your money on one spin of the roulette wheel.
Instead, you need to do your homework, weigh your options carefully, and choose a firm that aligns with your trading style, risk tolerance, and long-term goals.
Exactly. It's not just about finding the firm that offers the most money or the highest profit split. It's about finding the right fit for you, a firm that provides a supportive trading environment, fair and transparent conditions, a clear path for growth, and a commitment to your success.
And don't forget about regulatory compliance. You want a firm that's properly registered, has a solid track record of ethical conduct, and takes your financial security seriously. Remember, you're not just choosing a capital provider, you're choosing a business partner.
A partner who will be there to support you, guide you, and help you achieve your trading goals. So instead of getting swept up in the excitement of instant funding, take a deep breath, do your due diligence, and make a well-informed decision that sets you up for long-term success.
And remember, if you're looking for a prop firm that checks all those boxes, transparency, fair conditions, a supportive environment, and a commitment to your growth, look no further than Traders with Edge. We offer a unique challenge designed to help you get funded with up to $500,000, along with educational resources and a supportive community to guide you on your trading journey.
We believe in your potential, and we're here to help you unlock it.
That's it for this episode of the Traders with Edge podcast. Thanks for joining us, and we'll see you next time.